I will now like to go over exercise 1916. On December 31st, 2020, Beclaire Inc. had 200 million shares of common stock and 3 million shares of 9% $100 par value cumulative preferred stock issued and outstanding. On March 1st, 2021, Beclaire purchased 24 million shares of its own common stock as treasury stock, and Beclaire issued a 5% common dividend on July 1st, 2021. 4 million treasury shares were sold on October 1st. Net income for the year ended December 31st, 2021 was $150 million. Let's look at the numerator first. We know net income was $150 million, and the numerator should be net income available to common shareholders. Well, we have the accumulative preferred stock. Preferred stock dividends are not available to common shareholders. So, remember we talked about cumulative in the problem in chapter 18. Cumulative means even if the dividend is not declared, it is not paid, we still have to pay the preferred shareholders when dividends are declared in future years. Because cumulative preferred dividends will be in arrears when not paid. For earnings per share purposes, whether or not they're declared or not, it doesn't matter. Cumulative preferred stock dividends, cash dividends, I should say, is included in the earnings per share regardless of whether they were declared. So, how do we calculate and subtract the preferred dividends because they are not available to common shareholders? You would take 9% of the $100 par, which is $9, times 3 million shares. So your preferred dividends would be $27 million. So the earnings per share available to common shareholders is $123 million. Now we know at the beginning of January they had 200 million shares outstanding. On March 1st, Beclaire purchased 24 million shares of its common stock as treasury stock. So they repurchased their own common shares, which is treasury stock, and it happened March 1st. So this would be a subtraction in the number of shares, which would be 24 million times 10 divided by 12. And then what we know happened is Beclaire issued a 5% common stock dividend on July 1st. So we know stock dividends or stock splits are treated from the beginning of the year to the actual declaration of the stock dividend or stock split. So we would have to restate the 200,000 shares outstanding at the beginning of the year times the 1.05 to give us 210 million shares. We would have to take the 24 million common shares purchased by the company there and take 24 times 10 divided by 12 times 1.05, and we would subtract 21 million. And then after the dividend was declared, the stock dividend was declared on July 2021, on October 1st, 4 million treasury shares were sold. So it would be 4 million, and there was 3 months outstanding to the end of the year, times 3 divided by 12, which is 1. So 210 minus 21 plus 1 is 190 million weighted average shares outstanding. You take the 123 million net income available to common shareholders and divide that by the weighted shares of common stock outstanding, which is 190 million. So your earnings per share would be 65 cents.